What's good, and welcome back to Invest and Trade with Jax. Hope you're well, guys. Happy Sunday. We're just going to go over our friend Bitcoin. We're sitting at 38,000. We lost our $40,000 level of support. That was a key level, guys. So we'll go over a bit of news and analysis. So we're sitting at a market cap of 725 billion. 24-hour volume is 18.58 billion. Ladies and gentlemen, if you're new to Crypto.com, you can sign up to the world's fastest growing crypto app, and you can grab one of the incredible Visa cards for cashback in crypto, free Spotify, Netflix, Prime, travel incentives, depending on the level of card you have, $25 just for signing up through my referral. So Bitcoin dips to 38,000 with further losses in sight. Now, guys, make sure to take these articles with a grain of salt. It's always just somebody's opinion. So the number one cryptocurrency has broken below its psychological 40,000 support level to hit a low of 38,000. The downtrend appears to be driven by over-leveraged traders in the futures market. Meanwhile, whales on the spot markets appear to be waiting for the asset to drop lower before accumulating more tokens. So there's just not a lot of interest right now in buying Bitcoin. So on-chain data shows that the number of addresses on the network holding between 100 and 100,000 Bitcoin has remained flat over the last month. These wealthy market participants do not appear to be interested in buying Bitcoin at the current price levels, possibly because they are anticipating lower lows. So despite the 40% price rebound Bitcoin experienced in the last 3 weeks, the network is not experiencing substantial growth. Glassnode data shows that the number of new addresses remains stagnant at an average of 400,000 per week. 400,000. Wow, seems like a lot to me. But as you can see here, we're not seeing that increase that we saw here with new addresses coming onto exchanges. Buying cryptocurrency, as you can see, the price was increasing as well, but we've just sort of flattened out. So given the high correlation between network growth and Bitcoin's price, it is reasonable to wait for a spike in this on-chain metric that supports the continuation of an uptrend. Until that happens, Bitcoin could be looking to test the 200-day moving average on the 3-day chart, coming in at 37,000, and it may test Tom Denmark's setup trendline at 33.5K, which is basically the previous low, guys. Failing to hold above this crucial support zone could trigger a cascade of liquidations in the futures market, pushing prices down further. So let's hop over to the analysis and we'll kind of see what they're talking about here. So you can see here we have lost all our key support. We lost 42,000, 40,000, which was a major level support here, support back here as well as being a psychological level. And we've also recently lost 38K as support. I didn't think that was the likely scenario. I thought we would hold the EMAs and at least see a dead cat bounce, but it looks like it was just a bit of a bullish fake out. We got rejected and we've rolled over. We did create a double top pattern. As you can see here, we created a top, we created a second top as we had talked about in a previous video, and we have broken down, guys. And basically we've met our technical target. We're quite oversold on the RSI as well as the money flow. You can see the last time we were this oversold was right here. So I would expect to see a nice relief bounce relatively soon here, at least back up to the EMAs, guys. We'll pop over to our next chart here on the daily. So we were talking about that inverse head and shoulders, but it's basically invalidated, guys. We can still create a higher low. Technically here we have a low, so if we find support here, we bounce. We can still create a higher low, but we'd have a lot of work to do, guys. We'd have to get back above the EMAs. So I'm just going to quickly take out this head and shoulders pattern, take out this neckline. So if we lose that current level of support coming in at about 38,000, then we're going to come back down and retest these lows about 33, 34K. And then your next major level of support is all the way down here at about 28,000. If we pop open the VPVR, the volume indicator, guys, my apologies. You can see here we have come back down to that major level of volume support coming in at about 37, 38K. So that does give us a good opportunity to bounce, guys. However, if that level is lost, do expect us to come back down to about 33, 34,000. So let's pop over to the weekly time frame. I just want to show you guys some moving averages. So we have the 21-week moving average here in red. We have the 50-week moving average in blue and the 200-week moving average in yellow. And as you can see here, here's the bear market of 2018. So you can see here we came down and we broke the 20-week moving average. We came up, we hit it as resistance, found support on the 50, and then we hit resistance on the 21 again. We broke the 50, we hit resistance, and then we capitulated down. If we look at our bull run back in 2014 and the bear market of 2015 here, 2014, 2015, we lost the 20 week, we found support along the 50, we came back up, we broke back above it, but then we fell below it. Bear market, guys. So as you can see here, we broke below the 20 week moving average, we found support along the 55, we were able to bounce back above it. It was looking really good here, like we might see continuation, but we sold off and we've fallen back below the moving averages once again, the 20 and the 55. Sorry guys, the 20 and the 50, and we've come up and we've basically hit resistance on the 50-week moving average. And in each bear market, we've come all the way back down to the 200-week moving average, which is coming in right now at about 20K. Now, personally, I don't think we're going to come all the way back down to the 20-week moving average because I think the market is maturing here. As you can see here, we had explosive moves to the upside, followed with a blow off top. If we measure this move from our bear market low all the way up to the top here, you're looking at 11,000% gain for Bitcoin. And if we go from our bear market low in 2018 all the way to the top here, you're looking at about 1,800. So in my opinion, as more money flows into Bitcoin, more whales, more institutions get involved, the market is beginning to mature, and we may not see a blow off top like we did in 2017 and 2013, which led to absolutely massive corrections. So the fact that we may not see that blow off top, of course, it's still a possibility here, guys. But let's say this was the top for Bitcoin and we are going into a bear market. If we don't have as explosive moves to the upside, I don't see us having as severe bear markets either. So maybe we just come back down to test these lows at 29, 28,000. Of course, we could find support in this area as well, in between 33,000 and the current price. Maybe we create a higher low and we see a nice bounce back to the upside. I mean, in my opinion, this is a pretty weak dead cat bounce. If we were going through that dead cat bounce scenario, I was expecting us to come up to at least about 55, 60K and then begin to roll over and retest these lows here. But maybe this is just market maturity, guys. We're not going to see as explosive moves, but then we won't see as severe bear markets as we have in the past. If we look here on the MACD has never ever been this low on the weekly time frame. So we basically just have to wait for Bitcoin to bottom out, see the MACD start to curl back to the upside, and we can see that next impulsive wave to the upside that we've been expecting here for BTC. But the fact that we are under the 21-week moving average as well as the 50-week could signify to us that we are entering into a bear market that we've never seen before in the past. But if that is the case, guys, I don't see us coming all the way back down to the 200-week moving average. Of course, it's a possibility, guys, but if we aren't going to see these explosive blow-off tops like we have in the past, then I wouldn't expect us to go through as deep as a correction or as deep as a bear market as we have seen for BTC. So the bullish scenario, guys, we find a strong level of support and we get back above these moving averages, as well as on the daily time frame we are underneath the EMAs once again. So as long as we hit them as resistance, we can see continuation of the downtrend. But honestly, I was expecting at least a dead cat bounce, so that's still on the cards. Maybe we create a higher low, we create a level of support, and we see a beautiful bounce to the upside, see that dead cat bounce, and then roll over. And of course, what the bulls would want to see is that we see that bounce, but then we come up and we break this high. But in my opinion, it's a pretty bearish sign that we came up and we got rejected here, and we failed to get back above the moving averages on the weekly, the 21 and the 50-week moving average. That's basically it for this one, guys. Shout out to the Discord. Let me pop it open really quickly here. We have over 1,800 members talking all things crypto, posting chart patterns, as well as DCA charts for the live trades on the channel, and buy and take profit zones if you're looking to dollar cost average into your altcoin positions, guys, based off Fibonacci support and resistance. Price of a coffee, $3.50 USD. If you want to trade with me, sign up to Bybit, and I will see you in the next video. All right, much love. Take care.